it starts to record. So thanks everybody for joining our webinar today regarding guidance at the capital markets, do's and don'ts in practice. My name is Eva Reuter from the company Dr. Reuter Investor Relations, and we are a consulting agency for investor relations with offices in Frankfurt and Münster, and the company has been founded in 2006. Regarding the concept of the series, it's all about IR knowledge within 15, maybe 20 minutes, which is one coffee break. And the agenda for today, we will start with the interest of investors and analysts in forecast report. Have investors and analysts the same interest, or is it maybe a little bit different? How many companies offer guidance? What is the typical forecast horizon for such a guidance? Formats for publishing forecasts, media for publishing forecasts, and what type of forecasts are common. And last but not least, the forecast strategy of companies. Then just one slide regarding our next webinar, and last but not least, one slide regarding our services. So we will start with interest of investors and analysts in the prognosis report. How many analysts and how many investors are interested in forecast report? 83% of analysts have a great or very great interest in forecast report. In detail, 58% of the analysts, they have very great interest in the report, and 25% of the analysts, they have great interest. So in total, 83% of analysts have a great or very great interest in forecast reports. How about the investors? The numbers are slightly little bit lower. 74% of investors have great or very great interest in forecast reports. So in numbers, 49% of the investors have a very great interest in forecast reports, and again, 25% of the investors have a great interest in forecast reports. Why are these numbers a little bit lower than the numbers which we saw here from analysts? Analysts just need forecast numbers and forecast figures for their cash flow model within the analyst reports. And how many companies offer guidance? In these days, we see that 94% of all companies offer some form of guidance in financial and or non-financial form. If we have a closer look, here we have the microcap companies, small cap companies, and we see that 20% of the microcap companies do not publish a guidance. At the same time, we see that nearly 18% of the mega cap companies also do not provide a guidance. I think this is quite unusual that so many mega cap companies do not offer guidance. If we have a look at small cap companies, here we see that 13% of the small cap companies do not offer guidance. Mid cap only 9%, which means 91% of the mid cap companies offer guidance, and large cap, 89% of the large cap companies offer a guidance. How about the forecast horizon? What is the typical forecast horizon? Nearly 93% of the companies do not offer any longer a quarterly forecast report. And the National Investor Relations Institute, the NIRI, also recommend issuing long-term guidance with a forecast period of at least 1 year. This is now, if we have a closer look at the numbers, the typical time horizon for such a forecast. So 76% of the companies offer now a forecast for 1 year, and 24% of the companies commit themselves for 2 years or longer. In detail, 9% of the companies offer a forecast period of 2 years, and 15% of the companies offer a forecast period of even longer than 2 years. So, and in total, 24% of the companies offer a time period or a forecast period of at least 2 years or longer, and 76% offer a forecast period of 1 year. What is the content of the forecast report? First of all, we start with financial aspects. Typical are, of course, revenues, EBIT, EBITDA, dividend policy, free cash flow, net income, working capital costs, gross margin, depreciation and amortization, and segment information. And what we also see is, if we look at the more and more sustainable investments, we see that more and more companies also publish ESG information as a forecast, like employee satisfaction, training measures, energy consumption, or social commitment. And then we have further category like non-financial forecasts, like customer satisfaction, customer base, number of employees, information on research and development, new products, qualitative information on the market, trends that have an influence of the company business, industry information, market growth, estimate of drivers, and non-financial key performance indicators. And if we have a look at these non-financial measurements, we see that the most companies, 42%, they publish market information regarding market conditions, and they publish forecasts regarding trend information, and they publish forecasts like high-level performance measurements or factors that may drive earnings in the future. What are the typical forecasts for publishing, the formats for publishing forecasts? 89% of companies use an analyst guidance and forecast report. So 89% use the analyst guidance and 87% use forecast report. Only 58% use the half-year report, and only 56% use the quarterly report. Which media are used for publishing forecasts? The analyst conference is in the lead with 91%. So 91% of the companies use the analyst conference to publish their forecast information. 70% use investor conferences, and this is, as you might remember, analysts are more interested in forecast information than investors, and only 36% use press conferences, and only 29% use the AGM for forecast information. Which type of forecasts are used by companies? The majority, 63% of companies, formulate their forecast as an interval forecast. What is an interval forecast? For example, intervals for the expected turnover, like we expect a turnover next year somewhere between 120 million to 140 million. This is a typical interval forecast. And nearly 40% of the companies use qualified comparative forecasts. What is a qualified comparative forecast? Forecasts are then made in the form that a slight increase in sales is expected. So they do not offer specific numbers like we expect a 5% higher increase or a 10% higher increase. They speak about a slight increase in sales or revenues or earnings. And what is the typical forecast strategy? 72% of the companies, so the majority of the companies, try to formulate their forecasts in such a way that they can be met in any case. So this is the majority of the companies, and only 6% of the companies make forecasts in the form that they not only want to meet them, but even exceed them. So the most companies really try to formulate in a way that they definitely will meet them. One of the main aspects behind it is if you have to publish that you will not meet your earning guidance, for example, then the company's the share price normally gets under pressure. So, and this is already the last slide regarding guidance. One professor based in New York mentioned providing earning guidance is just a start. Giving more information to investors generally and doing it in an honest and understandable way is good business. So that's it regarding the guidance. Our next webinar will take place in 2 weeks' time. It will be about ESG, and we will have a closer look regarding engagement, investing, and voting. And we will talk about pressure from ESG investors. And again, we will offer 3 different time slots: 10 a.m. CET in English, 1 p.m. CET in German, and 5 p.m. CET in English. And one last slide regarding our services. For small and micro cap companies, we have developed a, I think, really great IR program where we write articles, where we do equity research, corporate access, investor targeting, IR consulting, and financial PR. Then we offer equity research, we offer corporate access, investor targeting, IR consulting like IR strategy or expectation management, financial PR, where we regularly publish articles about companies and interview companies via a video conference, and ESG services like, for example, roadshows to ESG investors. That's it from my end. If you have any further questions, please do not hesitate to contact me. And if you have any, and I would be delighted if you would join us at our next web conference and webinar in 2 weeks' time. Thanks a lot, and goodbye.